Good morning, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern on Wednesday, Hump Day, the 28th of June 2017. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance this morning looking uh, looks like we're allocating to risk somewhat this morning. The Russell leading the pack up 0.53% or 7.5 points at 1412.40, followed by gold. Gold's back up at 1252.30, and then the S&P 500 is up 7.25 points, 7.5 points up 0.31%. The laggard this morning is the U.S. Treasury bond. Crude oil is getting is lower this morning by only 7 cents. Crude oil had, and I'll cover this, had a pretty poor uh, API inventory report. The euro is down 8 pips, trading at 113.89. The euro getting pulling back after reaching 114.38 in the futures this morning. So it's a mixed bag. The 10-year note's unchanged. It's is unched at 126.09. And that's really pretty much it. As far as what's likely to drive us, what's driven us overnight, the API inventories came in at 4:35 p.m. yesterday at plus zero point 0.9 million, plus zero point 0.9 million barrels against the expectation of negative 2.7 million. Uh, so we had a big sweep down on that from about 24 or 44.20 44.20 to about 43.55, about 70 cents, 65 cents or so on the open. But then oil quickly recovered back up to 44.19 and has retested the scene of the crime, the SOC from the API inventories at 44 with a high of 44 and a quarter. That's the high in the overnight, and we're trading at 44.14. And so it's shrugging off the API inventories report. For crude, we get the 10:30 Department of Energy report, which is either going to confirm the API inventories or refute them. It seems like oil traders are pricing in a better report from the DOE than the API. Overnight, if you've looked at the euro chart, you're probably wondering what the heck is going on there. The euro, of course, rallied big time yesterday. Big moves in the euro, big moves up in the euro, big move down in the German Bund. I tweeted about it. It was like almost a third standard deviation day in the Bund. Um, the news there on the euro is that the ECB came out with a comment stating that the market is misjudging Draghi's comments yesterday. Speech was intended to strike balance between economic growth and need for continued monetary policy support. The market was pricing in the potential for the ECB. Draghi's comments were very dovish, so it was pricing the ECB potentially not needing to support the market as much, and so the euro jumped up, the Bund sold off. Comments suggest the ECB will be patient with inflation, can live with inflation taking longer to rise to target, and that right there has caused the euro to have a quick sweep down. This morning at 7:30 Central, 8:30 Eastern, we got May advanced goods trade balance. Came in a little bit better, negative 65.9 billion versus negative 66, just $100 million better. And then May preliminary wholesale inventories came in higher, which is worth 0.3% versus 0.2%. Looking at what we're expecting for today, wow, this is taking longer than I expected. We're looking for U.S. pending home sales month on month for May, expecting 1%. The prior is negative 1.4. And then, of course, DOE energy, the energy report. We're looking for crude oil. The DOE estimate is negative 2.25 million, a draw of 2.25 million barrels. Distillate inventory is expecting a surplus of 350,000, and gasoline inventory is expecting neither nor. So it's expecting zero. As far as speakers, we're getting BOE's Carney at 9:30 Eastern, right at the open, and that is it. So what we have to look forward today is the 10 o'clock pending home sales and the DOE inventories. Let's take a look at what we expected yesterday. So yet again, Hypo 1 was way off. Just not reading this auction very well. Although the auction during the day is proceeding well, it's definitely testing and swinging properly, in my opinion. But yesterday I was looking for it to return back to balance and potentially push up to that 2440 after a test lower. So I was looking for a test early on, open auction out of range, test down, and then an impulse up, consolidation at the MC point of control, and then another impulse up, but finishing right inside of the prior day's range. The second hypothesis, which is what actually worked out to a point, to about right there, to when the ECB started talking, the second hypothesis is an open auction that tests into the prior day's range, into that 35.50 area, and then fails to continue. So we have a lower high, impulse down, and then a test of 27.70, 27.25, and then the expectation was for the afternoon, the old buy the dip kicks in to bring us back into balance. Expected it to finish at 35, 34, 35 area as it has for the last few sessions, 34, 35 or so, 34, 35 or so, 34, 35 or so. Okay, that's what we're looking. And here's another 34, 35 close. Okay, so you can see that we keep closing right in that area. The market likes that point of control a lot and keeps auctioning back to it. And that's what was expected yesterday. Here's what we actually got. Let's move this out of the way. This is what we actually got. We got the open, we got the dip down, we got the open auction right there. And then we got the push into the prior day's range. Remember, the dark green line is the prior day's low and high. A push into the prior day's range, could not get to the point of control at 38.50, and then we have an impulse down. This is what was expected for Hypo 2, impulse down to 72 and a quarter, which is right here. The ECB deal came in right here, okay, and then the market continued lower all the way down to 2050 before the bounce back up almost to mid. This would have been a beautiful setup, a nice low volume node right there. Low volume node backed by the mid, backed by the point of control, backed by a whole lot of zippers. This is a beauty right here to take the short, in my opinion. Of course, there's no guarantee of profit ever in trading. But this setup here was just very, very clear to me. And then as we pushed into this 28.50 area, that would have been an ideal area for short for the continuation. Target is 20.50, and then we get this rotation down into 16.5 for the bounce. And here's the bounce. We got it overnight, 24.27.50. So we ended up getting that pop on the close, but again, I was looking for it to get down to 27.50, higher low, and then push to 34. So into the close, the auction was interrupted by the ECB. And by the way, it sounds like it's kind of deterring or irritating or whatever. I welcome any selling volatility. To be honest, it just gives us a chance to even if it's at a loss. Initially, it gives us a chance to start to get some volatility and really lay off some risk as soon as trades work in our direction. Of course, volatility increases your chance of profit, but also increases your chance of risk. But we're here for movement. The lower the movement, the fewer opportunities during the day, and the fewer chances. Like I would rather come in and have 10 trades and have an opportunity at 10 stabs than to come in and have one trade and it's binary, either wins or loses for the day. I want to have many opportunities to make money or to make up for losses as much as possible. So here, that takes us into the overnight session. The overnight session goes sideways, 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 sideways. We end up extending this low down. So consolidate, extending this low down, and then we find our buyers right down into the 1375 area, and then we're pushing up, and you can see here pushing to 24.29, and we keep trading. We're trading right up against that overnight high. We're trading below last week's low, so we have, with yesterday's drop right here, coinciding with the ECB, we have ended uh, we have ended the one time framing up on the weekly chart. So the weekly chart, and I'll show you that in a second, has been trending up for some time now, for about 6 weeks or so, and that ended yesterday. Okay, so I'm looking to press the short side for another rotation down, potentially not to the low, but another rotation down. Not today, but right now we're set up to continue higher, into the session. Okay, don't forget that in just 2 days, on Friday, we get month end, quarter end, and the end of the first half of the year on the 30th. And then we go into the 4th of July Independence Day holiday. So I'm expecting a fair amount of movement here in the next today and the next 2 days, and then expecting it to go dead early on Friday as people leave for a 4-day weekend. Okay, so here we go. I want to show you the weekly. Here it is. So if you look at these profiles, each one of these profiles, there's one. This is a TPO profile. This is a classic market profile, and this is a volume profile. Okay, and you can see from the 15th, we have been carrying a higher low throughout. So we've been one time framing up, and then Zippo, it ended right here, and you see this burst down, and now we're back against that low at 29. We're against the prior weekly low. So what we've put in this week is a lower high, lower low on a fairly a relatively large time frame, at least to the time frame I trade against, or I trade in. So you got to pay attention to those sorts of things on the daily. So if we split up this week, let's clean that up. If we split up this week and we look at the daily again, just like last week, let's split up this week as well. Just like last week, we get a peak high, an all-time high, then a lower high, lower high, lower high, lower high, and then we bust it on Monday with a higher high, but then we end up taking out the week. So this week is a lower high, lower high. So we're one time framing down. So we're one time framing down on the daily after the week starts, but now we're one time framing down on the weekly. I'm emphasizing this point just to caution those who are holding long positions strong. Chances are you're likely to get paid because we keep pushing higher as the trend is higher. But overall, just be aware of these signs that the market's not able to sustain an auction going higher for now. So including yesterday's volume, you can see we're filling in below the MC point of control and are testing the extreme of this profile. So yesterday we basically moved down into the lower extreme of the profile and we're pushing back up. This is likely to continue higher this morning, find resistance, put in a lower low, a lower high, and then make an attempt again at the low. So my primary hypothesis this morning, let's zoom in a little bit. My primary hypothesis this morning, I'm sorry, hang on, I need to clear my throat. My primary hypothesis this morning is an open in range. We're opening up against this low volume node yesterday, and then we're likely to push into the prior day's high volume node up high which is the mid of the month around 31.50. I'm expecting it to pull back a little bit and then attempt to push into 35.75 and then hold somewhere in the in between that 27 to 35. That gives us 8 points of range, which is basically what's expected for today. That's the primary hypothesis. The primary hypothesis is bullish as long as we remain above the 2120 area. I drew that line in the wrong spot, 20 right here. As long as we remain above here, we're likely to push up to 35.75. We're likely to take a bid and continue higher. And then the secondary hypothesis is if it fails to take out this low volume node right here that we left yesterday against all of these lows, look at all these lows right here. Okay, if it fails to take that out and sustain it and falls below and puts in a lower high, then I'm looking for 24.20 pretty quick. So we get an impulse down, push through to the high volume node at 24.17, and then hold back up. And now we have a point of control that's lower, and the point of control is shifting down from there to there and lower. Okay, so now we have price action, one time framing down on a weekly, price action, one time framing down on the daily, and then we have volume or the auction one time value, one time framing down as well, which is likely to give us a sustained move to 24.05 and then 24.01. That's my secondary hypothesis there. Okay, but the primary idea for today is likely to be bullish into 35.75 from where we are now, and then I expect this to go into a holding pattern up in the 35-38 area, potential close at 31, 32 or so. That's what I'm expecting. Now my job is to look for what the market shows me, what the market wants to do, what the participants are fighting for, and then to align myself with that wave and try to surf it as far as I can with a runner, and that's the goal. Okay, win or lose, that's what I have to do today when the trades show up. Okay, hope that's clear. I'll let you go now. Good luck, and I'll catch you tomorrow. Take care.